What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I have some of the top dividend stocks to buy and hold forever, actually in December. And some of these I own. I have a list right here, and some of them you guys gave me some recommendations in the comment section on my channel in the community section, and they look very attractive. Some of them that you told me to check out or do videos on. And again, this is not financial advice for entertainment purposes only. I have a disclaimer in the description, but these are pretty hot. I really like them. I studied them a little bit. I know it's finals week, and I'm getting a little crazy because of finals week. But wow, these are really attractive. Some of them that you had. I'm looking at my note card right now, and I'm going to do a video on these guys. So make sure you hit that notification bell so you don't miss future videos. Smash that like button, and let's check these stocks out right now. And that first stock is Pfizer. So it's the symbol is PFE. I actually own Pfizer, and I'm long in these guys. They have a ton of products out there, not just the vaccine, but they have a ton of products for consumers that people need. Medications that include blood pressure medications, anti-anxiety, um, psychiatric medications. These guys are in demand. I know that they kind of did a spin-off with a company VTRS, but these guys are still a very powerful company. They have many medications, as I discussed with you guys, especially blood pressure medications. There's a rise in hypertension. It's going to be an epidemic. It's probably starting to become one. They're saying in 2030, like how much money is going to be pumped into hypertensive medications. It's unbelievable. And these guys are actually doing a pretty good job combating the bug. And you know what bug I'm talking about that's out there. Not just the vaccine, which shows efficacy, but they also have a new medication out there. Hopefully, it'll get approved by the FDA. I'll go over that shortly. But I absolutely love these guys as a dividend stock. People need medications. People need antibiotics. They have antibiotics. They have medications that are crucial, especially ACLS, like cardiac life support. They have medications with that. So they have a lot of things to the table that people need. So I'm going to review this and go over this medication. Hopefully, that'll get passed by the FDA. They're again, this is not medical advice, but this is very promising for these guys as a company to combat the bug. This is on November 5th, 2021. Paxlovid, was found to reduce the risk of hospitalization or death by 89% compared to the placebo in non-hospitalized risk adults with the bug. The overall study population through day 28, no deaths were reported in patients who received Paxlovid, as compared to 10 deaths of patients who received the placebo. Pfizer plans to submit the data as part of an ongoing rolling submission to the U.S. FDA for emergency use authorization as soon as possible. So hopefully we're starting to win the war on this bug. They have a vaccine. People are taking the Pfizer vaccine. Hopefully this medication works to combat the bug. And these are just so many things that they carry to the table. They're a huge company. I really think these guys are undervalued as a stock and dividend stock. And I'm going to show you their dividend history is phenomenal, which is amazing about these guys as a company. Many dividend investors own this stock and Pfizer stock for a reason, because they are a phenomenal dividend stock. So I always tell you guys, study the trends of the dividend stocks in the past 5 and 10 years. Check out their stock split history. Understand if these guys are in demand. And I always want to raise. You want to raise, don't you? And these guys are raising their dividends. Look at this. 2013, 24 cents. 2014, 26, 28, 30, 32, 34, 36, 38, 39 cents. It's sitting at $53.37 with a dividend yield of 2.9%. PE ratio is 16.27 with an annualized dividend of 156. How do you say no to that? That's why I own these guys. That's why I'm long in Pfizer stock. Let's jump to the next dividend stock. And this is one due to popular demand. Simon Property Group, it has a symbol SPG. It is sitting at $150.20. Look at that dividend yield, 4.31%. Has a market cap of 50.36 billion US dollars. Its year range was 8202 to 171.12. Day range was 148.37 to 153.49. So I always tell people, let's study the real estate investment trust before we pull the trigger on it. That's what I do. I study the real estate investment trust. I see what they are about. I see if they're in demand. So let's check these guys out. One thing is they're the premier innovator of global retail destinations. Simon is leading the way in commerce and in our communities. So, a few things. SPG's regional mall portfolio includes assets of international, re-owned, irreplaceable, proven assets, which are preferred locations for retailers. Our portfolio is geographically diverse and provides a gathering place for consumers to shop, dine, and entertain in a safe, comfortable environment. Here's the thing. So we looked at that. These are pretty popular outlets, okay? And I don't see these guys in big trouble at all. Again, this is not financial advice, but look at what they're doing. So here's Bay Park Square. These are in high caliber, high end areas, a mall, outlet marketplace, premium outlets. This looks really good. So, I mean, look, this is their portfolio: regional malls, premium outlets, outlet marketplaces, the mills, community lifestyle centers, office spaces, hotels, residential, designer outlets, and partner properties. Okay, they sound pretty strong. What about their revenue? Okay, so I'm not too upset with that because I see 2014, 2015, 2016, 2017, 2018, 2019, 2020. I see 4,870, 5,266, 5,435, 5,527 to 5,645, 5,755, and then 2020, the pandemic hit. There's a little bit of a kink right there at $4,607. But that's not bad because, again, we can play the pandemic card. So, obviously people aren't going shopping. You're going to lose a little bit of revenue being a real estate investment trust. You saw the dip there. How are their dividends doing? So we saw an increase and a little bit of decrease in revenue. Big deal. They have a high dividend yield. The dividend increases. Look at this. 2013, 115, 130, 150, 155. Okay, they took a little bit of a hit. You can play the pandemic card. They lost a little bit of revenue, but their dividends are increasing. So look at this. 2.5, 2.10. They're eventually going to go back up there. Again, this is not financial advice, but look, their trends are showing they're going back up. Hopefully their revenue will increase. PE ratio is 23.94, dividend yield is 3.93%, annual dividend of $6.60. That's great. That is very attractive as a dividend stock, and this is why it's on my radar. And kudos to the tip off from you guys. And we're going to jump to the next dividend stock. That next stock is Campbell Soup. So, this is a very popular product in the stores. You see it on the walls. You see it during especially flu season and everything. People buy Campbell Soup like crazy. They're in cans. Got to watch the sodium, obviously. But they're a very popular company. And this is why these guys are on my radar. First of all, its day range is 40.07 to 40.68. Its year range is 39.76 to 53.77. Market cap 12.06 billion US dollars. Its volume is 2.04 million. PE ratio is 12.24. Dividend yield is 3.66%. So I like dividend stocks have 3% or above. I mean, obviously, if it's above 5%, you got to be careful. Watching a yield trap, you have to be careful with the revenue. Campbell Soup, you see their labels all the time in stores. This is what makes them a very popular dividend stock. You see people buy their products all the time. These guys are in demand. Guys are a company in demand, and look, their price per share is not increasing that much. I mean, it doesn't make it a popular traditional or Roth IRA stock. I mean, I like to see an increase in net asset value, an increase in dividends over time, which make those guys very popular. But Campbell Soup has a very extensive dividend history, and I see that going up over time. Check this out. And the beauty of Campbell's Soup is they have a reputation of increasing their dividends. So right here, 2013 was 29 cents. 2013 was 31. Slowly it went up. It hit 35 cents in 2016. Just increased its dividend in 2021. So you're getting maybe a slower dividend increase. It's not as aggressive as I like, but it's a very good dividend stock. I would consider this a very good defense stock too. So you guys mentioned that one that you want me to do a video on them. I like dividend increases. It's not as fast as I want. I mean, I like if I compare Campbell Soup and Pfizer, I would go for Pfizer right now. But Campbell Soup is still a really good dividend stock with a dividend yield of 3.67. Uh, again, it's not as fast as I like. I like fast. I like ones that grow really fast with their dividends and are stable, obviously, financially stable. Still not a bad dividend stock. Many people own this one for a reason. It's very good. It's a very attractive dividend stock. So you can't go wrong with that one. This next stock that you guys gave me a tip off to do a video on, I really like this one, and it's a really good dividend stock. Check this out. And that stock is Snap-on. I really like this one. This is very attractive. The symbol is SNA. Has a dividend yield of 2.72%, a PE ratio of 14.26, market cap of 10.89 billion US dollars. Its year range was 165.56, 259.99. Stay range was 203.40, 209.19. Its previous close was 202.77. So thing that makes these guys very interesting and attractive as a dividend stock, they're not jumping up too fast against the S&P. They're a little stagnant, which is not bad for a dividend stock. But these guys as a company are in demand, which I'll reveal to you. So here's some information about these guys. They were founded in Milwaukee, Wisconsin in 1920 and moved to Kenosha, Wisconsin in 1930. 80,000 SKUs in the product line, 31 active and pending patents throughout the world. 29,000 people have visited Snap-on headquarters innovation since 2009. They have paid a consecutive quarterly cash dividend without interruption or reduction since 1935. So that's very popular. What else? So here are their customers: automotive, aviation and aerospace, collision, constructive, agriculture, electronics, heavy-duty trucks and fleets, manufacturing, medical device manufacturing, metal cutting, military and defense, mining, oil and gas, power generation, rail, schools and students, and vineyards, landscaping. That's pretty impressive. So I'll just go over maybe one of their brands, just which make these guys very interesting. So look at this. For nearly a century, our iconic brand has represented our company in a broad array of unique productivity solutions, tools, equipment, diagnostics, repair information system solutions. The Snap-on brand conveys a badge of professionalism, delivering confidence in those performing work of consequence, where the second best is not an option. Celebrated by professionals who perform such work because we help them solve the critical. As a result, the Snap-on brand always conveys a special sense of pride, dignity in making Snap-on a name to call their own. Our products and services encompass thousands of premium hand tools, power tools, tool storage products, including tool control and software and hardware, diagnostics, equipment-related accessories, electronic parts catalogs, warranty analytics solutions, business management solutions and services, OEM specialty tools, equipment and development and distribution, and OEM facilitation services. That sounds like a company in demand. Let's check out their dividend history. And they weren't kidding when they said without interruption with their dividends. They really pride themselves in increasing their dividends, which makes them an attractive dividend stock. Oh, there's 2013 it was 38, then at 44, 53, 61, 71, 82, 95. It hit $1.42, and they ain't stopping. They're sitting at $209.16. PE ratio 14.18, dividend yield of 2.76%, annual dividend of 568. That was a great catch from that tip-off from you guys in the community section. Let's jump to the final dividend stock. And I own these guys and absolutely love these guys as a SIN stock. Universal Corp, UVV is the symbol. It's sitting at $47.91. Dividend yield is 6.51%. PE ratio is 12.09. Market cap is 1.18 billion US dollars. Its year range is 44.74 to 60.95. Stay range is 47.03 to 48.11. I absolutely like these guys, and I'll explain to you why. So these guys are in the tobacco leaf business, and they're discussing future opportunities. And I'm going to tell you, being in the tobacco leaf business, It is a crazy sin stock, and they have a very good dividend yield, just like BTI and just like Altria. MO is a symbol. The revenue is not bad either. So I'll show you their revenue. So here's the thing. Okay, these guys, this is in millions of US dollars, 2,271, 2,120, 2,071, 2,033, 2,227, hit 1,909 because of the pandemic, and 1,983.357. So guys are slowly starting to increase their revenue. You can play the pandemic card, but what's beautiful is their dividend history. Look at this: 50 cents, 51, 52, 53, 54, 55, 75, hit 78 cents. It has a dividend yield of 6.7% with a PE ratio of 11.86, annual dividend of $3.12. That's $47.95. That's very attractive as a dividend stock. That's why I have these guys in my M1 Finance dividend portfolio. These guys are a powerful dividend stock, and I really am excited to see these dividend increases with these guys. And they have a reputation of increasing their dividends. Their revenue is not bad, and people are going to smoke. They just don't care. So let me know what you think of this video. I really enjoyed the community comments that you guys made. Got 5 dividend stocks. These are my top dividend stocks to buy and hold forever. Let me know what you think of them. Do you have interest in any of them that I posted a video on? Let me know which ones you think are better. Which ones do you think are worse? What do you think about Pfizer as a dividend stock? Do you guys like those guys as a dividend stock company? So make sure you subscribe and hit that notification bell so you don't miss future videos. This is Darth Dividend. You guys have a good one. I will be posting a video tomorrow. So you got to hit that notification bell, and don't forget to hit that like button. And again, let's kick some ass with these future videos. All right, take care.